Hello everyone, welcome to Eco Wisdom by Dr. Aditi. Today we have come up with a new segment. In this particular segment, we have designed a test series. So, these test series basically include multiple choice based questions, MCQs, and students have been given 1 minute time. So, the timer is also included in the test, and you have to mark the correct answer for that. After that, after the 1 minute gets over, the correct answer for this particular question will be displayed to you. So that's how this test has been designed. So today, the particular test that you are going to solve, or the students are going to solve, is a very generic basic test which contains different like technical as well as basic questions from economics, finance, accounts. So after this, however, after this test, next test onwards, we are going to take up like specific topics or say specific subject under economics, say developmental economics, public finance, international economics, and we will be designing these tests. Also, one important thing is net set question papers. So net set exams are approaching. I think in June, set Maharashtra is going to take place. So for the paper 2, which is economics, for that especially we will be solving all the previous year question papers, or we will also be designing new question papers based on previous question papers, and we will be doing the entire series over here with you. So the main advantage is those who are interested, or the aspirants for these set net tests, as well as the college students, say BCom, BAF, BBI, BA students, they can actually take these tests. They can mark their answer with us during the test, and after that answer has been marked, I will give the explanation regarding why a particular answer is correct. So the justification, the theory behind that particular answer, etc., will be provided on screen for all of you. So that's how you can actually these like take up these tests with me and solve it. One more advantage is like, especially in NetSet exams, so all these MCQ based exams, hardly like during the exam there is hardly 1 minute to solve these questions. Like there are say 50 questions in the set exam, and there is like the 60 minutes, even like for paper 1, I think, or even if there are more questions, it is the same. So you have maximum like 1 minute for each question. So what happens is some questions can be solved faster and some require more time. That you will realize during the test also today. So how to solve that, how to manage your time, what are the tricks that you can use on the spot when you see your question in the test. So all these things you can learn, you can practice with us, and you can become pro at it. So especially in new education policy, MCQs have been given importance because the marks distribution is such. So for that, you will be you can take these test series, and it will be very helpful for you, I'm sure about it. The first question that we have is, a bank is a financial institution which deals with the deposits and dash. The four options that you have is advances, insurance, taxes, and real estate. So you can see the timer is on, and you have around 40 more seconds left. So what you have to do is you have to mark your answer, and then once the timer goes off, we will come up with the correct answer. So I hope that you are quite familiar with the concepts of financial institution, banks, their functions, everything. So out of these four options, what is the correct answer that you already know? Last 10 seconds to mark your answer. Yes, and it has stopped. So let's see the correct answer now. Advances. So a bank is a financial institution which deals with deposits and advances. So as you all know, deposits is what? It is basically the money that people deposit or keep in the banks, and advances is more like loans that banks give out of the deposits that people have kept. So that's the correct answer. Now let's move on to the next question. Which act defines a banking company in India? Companies Act 1956, Banking Companies Act 1949, RBI Act 1934, and SEBI Act 1992. So you have to mark the correct answer. You can see that the options given are a little bit confusing with the similar kind of information that is being shared in the options. So if you have thoroughly read your economics books and everything, then you can find the correct answer. Last 15 seconds to go. Yes. 5, 4, 3, 2, and 1. Let's see our answer. It is Banking Companies Act 1949. Let's move on to the next question. Which bank is considered as the apex institution that regulates money supply? First option is State Bank of India. Second option is ICICI Bank. Third one is Central Bank, which is RBI. And fourth one is IDBI. This is quite an easy one. I hope you have already marked your answer. If not, do so quickly before the timer ends. Less than half a minute left. Apex institution means it is the highest institution in the entire country. Last 5 seconds. Yes. And the correct answer is Central Bank, which is RBI, Reserve Bank of India. It is responsible for regulating the money supply in the economy. Basically, RBI manages monetary policy in the country, and there are various qualitative and quantitative measures to control the money supply in the economy. So that is the answer is RBI, which is the central bank apex institution in India. Next question is, current account deposits are generally kept by whom? First, students. Second option is farmers. Third is salaried persons. And fourth is businessmen. A very easy answer. For this, all of you have to be thorough with Indian banking, and for other questions also, to some extent you have to be familiar with international banking, what are the foreign banks, etc. Once you are thorough with that, these questions are extremely easy. So last 10 seconds for this particular question. I hope you all have marked your answer. Yes. The correct answer is businessmen. So current account deposits are specifically known for businessmen because they are majorly into these particular current bank account services provided by the banks. Next question is, Which type of deposit carries the highest rate of interest? Current deposits, fixed deposits, savings deposits, and demand deposits. This one is a little bit tricky. If you use banking services regularly, if you are depositing money with banks regularly, if you are involved in the system, then this answer is very easy. And the timer is done. The answer is fixed deposits. So typically fixed deposits do give higher rate of interest. So next question is, the difference between the lending rate and deposit rate is known as the bank's dash liability, asset, profit, and reserve. These are the four options. Yes, again a very logic based question. You have to know where this lending rate is there in picture and where this deposit rate is in picture, and then it's pretty easy. Last 5 seconds and we'll see the correct answer. It is profit. So lending rate means basically when the banks give loans to consumers, then at that point of time there is some rate at which these loans have to be repaid. And then there is deposit rate. So whenever you are depositing your money in the bank, you get some rate of return or some like interest rate on those money which you have been kept in the bank deposits, and the difference between these two is basically bank's profits. Next question is, what facility allows current account holders to withdraw more than their balance? First option is cash credit, second is overdraft facility, third is fixed loan, and fourth is consumer credit. You still have some time, think and then mark your answer. Once again, cash credit, overdraft, fixed loan, and consumer credit. These four options you have. Yes. Time is up. Let's see the correct answer. It is overdraft facility, which is known for to withdraw from current account balances. So we will also be doing a separate video based on these bank and related services. So at that time you will come to know what is this overdraft facility. But in short, it is basically a credit arrangement allowing bank account holders to withdraw funds beyond their available balance up to like a pre-approved limit. So it is like a flexible short-term liquidity tool where interest is charged only on the amount utilized, not the total limit. And it is naturally commonly used for emergencies, business cash flow, or also via salary accounts. Yeah. Let's move on to the next question. Loans repayable on demand at 24 hours notice are called as what? First option is term loans. Second one is consumer credit. Third one is money at call. And fourth one is factoring. Okay, less than half a minute. Last 10 seconds. Yeah, the answer is money at call. So, what is money at call? So, basically, it refers to very short term interest earning interbank loans, usually, say, maturing overnight to 14 days, that must be repaid immediately upon the lender's demand. So, primarily used by banks to manage, say, their daily liquidity and meet cash reserve ratio requirements. So, these funds are critical for maintaining the financial stability. Next question. In the balance sheet, paid up capital is considered as what? Asset, liability, investment, and revenue. If you are good at economics as well as accounts, then this is like a cakewalk kind of a question for you. Less than half a second is required. Okay, now time is almost up. The correct answer is liability. Let's move on to the next question. Time starts now. Which asset of a commercial bank has 100% liquidity but 0% profitability? First answer is loans, second is investments, third is cash balances, and fourth is fixed assets. Now, what you can do here is take each and every option given here and apply the criteria given above in the question. So, take for example loans and ask yourself, if loans have 100% liquidity but zero profitability, do the same for investments, cash balances, and fixed assets. And that's how you will know your answer. Yes, I think you all have marked your answer with this. Time is almost up now. Let's see our correct answer. It is cash balances. Naturally, since it is cash, it is naturally 100% liquid, but there is 0% profitability. Next question is, statutory requirements like CRR and SLR are determined by the dash. First is central bank, second is finance ministry, third is commercial bank, and fourth is SEBI. If you know CRR and SLR, then I have already given a hint regarding this question's answer in our previous questions. So you should know what is CRR and SLR. So I will give a hint to you. CRR is cash reserve ratio and SLR is statutory liquidity ratio. And these are extremely important to manage money supply in the economy. So now you can find your answer. I have given you pretty much every piece of information required to solve this. 3, 2 and 1. Let's see our answer. It is central bank, which is RBI. So if you remember, I told you that money supply is managed by RBI with the various tools at its disposal, like there are quantitative, qualitative. So that is how, so under quantitative, CRR and SLR are considered and they manage money supply. So naturally, central bank decides CRR and SLR. Next question we have is, portfolio management refers to managing assets and liabilities to maximize dash liquidity, safety, profits, and taxes. This is a very easy one. At times, when you are writing your competitive exams, you have maximum 1 minute or even less than 1 minute to answer, like to find the answers for the questions. And some questions, they take up even more than a minute because naturally, they are complex and everything. But such questions, they are like 5-second questions, and whatever time is, left, that you can use for the more advanced type of questions. So we'll wait for the last 10 seconds, but I'm sure that you have already marked the answer. The answer is profits. Naturally, everything, investments, portfolio management, uh, asking for loans or keeping your money in the deposits, everything, in a way boils down to profits, boils down to earning returns on that money. You may give different names, different terms to it, but ultimately it is what it is: profits, it is returns on your own money. Move on to the next question. What refers to the ability to produce cash on demand? Shiftability, liquidity, profitability, and reliability. Again, quite an easy one, I feel. Yeah, I mean, all the BCom, BAF, BBA, all of you can answer. It's more like a GK one. Come on. Still half a minute left. Last 10 seconds almost. Yes. We hear this word very often, and it is liquidity. So cash refers to liquidity. Next question is, the difference between interest income and interest expenses is called as what? Burden, spread, yield, and risk cost. Mark your answer. Again, a very technical question. Those who have studied this will know. Last 10 seconds to mark your answer, and we are almost through it. Let's see the correct answer. It is spread. So what is spread? So in finance, it is basically the difference between two prices, rates, or yields. So commonly representing, say, the gap between buying, bid, and selling, ask, that is like price of an asset. It acts as a like a transaction cost for traders and a profit source for market makers, indicating liquidity and risk. Next question. Non-performing assets, that is NPAs, typically lead to dash profitability. First one is higher, second is stable, third is lower, fourth is 0. Again, a very self-explanatory and very common sense kind of a question. Last 30 seconds. Last few seconds. And let's see the correct answer. It's lower profitability. Naturally, non-performing assets, they are actually dead assets, so lower profitability. Next question. Banking sector reforms in India were significantly introduced after which year? The options are 1947, 1969, 1991 and 2005. Very theory based kind of a question. Again, this is also a very logical question. If you look at the options, you can easily cut one or two options, like they are out of the picture. Only two remain, and then you have to mark the correct one. It's time. Correct answer is 1991. So banking sector reforms in India, they primarily began in and around 1991 following the Narasimham Committee report aimed at liberalizing the financial system, reducing statutory liquidity ratios, strengthening prudential norms, and allowing private sector banks. Now, what I want to tell you is when you look at, say, the options, you can easily find out that 1947 is the year we got our independence. So, that cannot be the correct answer. So, that is out of question. 2005 is also comparatively very recent in that sense. So India got independence in 1947. Compared to that, 2005 is very recent, and by then we had a well developed banking system, the LPG, liberalization, privatization, globalization, it happened long back in 1991. So after all these years in 2005 to introduce something which is as basic as banking sector reforms in India is it doesn't add up. So now only two options remain, 1969 and 1991. So that's how you can actually exclude the inappropriate given answers or given options. So at times when you just cut, significantly delete these options in your mind, you can automatically reach the correct answer. Next question. So which fund provides startup capital to high risk technology oriented businesses? Mutual funds, housing finance, venture capital funds and factoring. Pretty easy, extremely easy, a GK based question. Mark your answer and wait till the timer goes off. Now, last 20 seconds. I hope you have already marked the answer. The correct answer is venture capital funds. It is known for this, providing basic capital for high risk businesses. Now next question is, internal public debt is raised and repaid dash. Outside the country, within the country, by the IMF and by World Bank. IMF is what it is, International Monetary Fund. Very logic based question again. This should be a quick one. Find your answer. Yes, last few seconds, and here we have our correct answer. Within the country, internal debt is within the country, external debt is outside the country. Next, the purchasing power parity theory is used to compare changes in dash: stock prices, exchange rates, interest rates, and wage rates. Find your answer. Last 15 seconds to go. So, purchasing power parity theory is a concept in core economics, especially related to international economics. And when you have studied the concept, you can find out the answer. The correct answer is exchange rates. So, purchasing power parity theory is basically, what it does is it adjusts exchange rates so that a unit of currency buys the same amount of goods in different countries, facilitating accurate comparisons of living standards and GDP. So basically, it eliminates the differences, say, in price levels between different countries, offering a more accurate reflection of real income and purchasing power than market exchange rates. Next question is, which market deals with funds up to 1 year maturity? Capital market, money market, equity market, and commodity market. Find your answer. We are all somewhere aware and familiar with all these kinds of markets for various reasons. We all are investors, in some or the other way. We do invest, say, in different kinds of markets, and that's how we are aware. As information we know. Last few seconds, and let's find out the correct answer, which is money market. So money market is known for like short-term debt securities. So it is for short-term borrowing and short-term lending. Next, so that's how all the questions have ended and the test has ended, and I hope that all of you have actually solved all the questions. You have taken this test with me because these, in a way, when you follow the timer and the guidelines, you can actually train yourself to solve these questions in a designated time, and this habit will be very useful for you when you go for your competitive exams, or today even in colleges, for degree colleges, etc. Under the new education policy, the internal exams that are organized they also contain basically such MCQ, multiple choice based questions, and as a result you have to be very familiar with this format. So once you practice more such sets, automatically you can achieve more marks in your exams. So this particular test, has been quite easy one, because this was just the first test, or this is like the beginning. So eventually we will also come up with tests with different topics, such as like anything which economics topic you want, like international economics, public finance, developmental economics, anything. So, and we can have such tests. In addition to that, we can also take up net set related question papers, so that you can actually take a particular year's paper with us. You can take that test and you can mark your answer and check it yourself, and we will also provide you with the correct explanation, why this particular answer has been found out. So I hope you have enjoyed this test, and stay tuned for more such upcoming videos. Thank you so much. We have just now completed the test, and I would like to know your opinions, your experience regarding this newly developed test. So let me know in the comment section, how do you like this new format? If there are any specific topics which you want me to include in such multiple choice based questions test series, or like in the beginning also I discussed that there is net set examination, or there is BA, BCom, BBA, BAF, such college level examinations. So in addition to that, if there are other exams, and specifically you can tell which exam and what kind of preparation you want, what kind of tests you want me to include, everything you can mention in the comment section. Also, my mail ID is displayed in the description box, so you can mail also regarding your experience, your queries, or anything, any requirements, any topic related questions, exam based questions, training based requirements, everything. So stay tuned. I hope you have enjoyed. So spread it amongst your friends, students, competitive exam aspirants, everybody. So watch the whole video, practice more and more, because practice will make you perfect and you can achieve your desired success. So like, share and subscribe. Thank you so much.